hikes. Let's do it. Let's do it all with our floor show guest, with Creative Planning President and CEO Peter Mallouk, with $745 billion in assets under management. Always so great to have you. What do you make of these markets? The ability to read through Iran, focus on earnings, focus on some of the fundamentals. Is that sort of the right thing for markets to be doing at this moment?
I think you nailed it. I think the market, we talk about all kinds of things: interest rates, Iran, Ukraine, the midterm elections, and the stock market cares about one thing and one thing alone. It's never cared about anything else. It never will. And that's future expected earnings. And earnings look strong. You have the AI revolution. There are going to be mega trillion-dollar companies that come out of this that'll wind up among the 10 largest companies of all time. Yes, there will be losers, but there are going to be mega winners. Almost every company is going to see operating margins expand because of this. Yes, of course, some will get wiped out, but the overall market will have far more earnings because of the AI revolution. And unemployment remains low. Interest rates remain fairly steady. It's all about the earnings, and the market looks at what's happening in Ukraine, and it looks what's happening with Iran, and it looks what's happening with the midterms, and it says temporary disruption, temporary disruption, temporary disruption. What's permanent? Expanding earnings because of a strong economy, low unemployment, modest interest rates, and the AI revolution.
How much, though, of a headwind are higher yields to this equity rally?
I think it's interesting. We always get so worked up about we're moving one quarter point this direction or 1 quarter point that direction. And look, interest rates have gone up hundreds of basis points over the last few years, and the stock market has shrugged its shoulders and soared. If your investment plans depend on whether the Fed moves a quarter point or not, it's not much of a plan. If we have very sharp moves either way, that's a whole different story. That's not what's happening here.
One of the biggest stories that this market's trying to figure out is software. Software as a service. Is AI coming for every enterprise software client near you? What's your take?
My take is this is real. Like what used to be the safest part of the market, large US tech-based recurring revenue stocks, is now extremely vulnerable. And we've seen these companies get hit. And yes, there are some bounces along the way, but I think we're going to see real problems here. A major CRM company that I've got a client that's a CFO of a Fortune 500 company that's creating their own client relationship management software to replace it. I've got a client that runs a major restaurant chain. They're creating their own software to replace the service that they use.
Can I ask you a question on that, though? So in some part, I understand that, right? Build it, don't outsource it, save money. But that's not their business. Their business is running a restaurant or, doing something else. They're not in the business of developing software. How do you square the two?
Well, I think you're right, but their real business is in making earnings grow. That's what everybody running these companies is trying to do every day, how to make earnings grow. And to the extent you can do anything to move the earnings needles, you're doing your job. Yes, your job is to run the restaurant or to run the Fortune 500 pharmaceutical company, but there are a lot of things the pharmaceutical company is doing besides making drugs that drive earnings. And there's a lot of things the restaurants are doing besides having chefs make food to drive earnings. And you basically look at every cost, particularly recurring costs that grow every year, and say, how do I eliminate that? How do I make a one-time investment to eliminate this? And so every business has to make the decision of what do I do in-house versus out? And that's how much of a distraction is this? How much money am I saving? If AI makes it less of a distraction and to build it and maintain it yourself, then that becomes a very easy decision. And that tipping point, if it hasn't arrived, is coming.
I want to talk about some of your picks. I'm seeing international small cap value. I'm seeing some mid caps in there. Why?
Well, I think that there's a lot of value left in those areas. I also like real estate because I think inflation has been more persistent. I think that people realize, and that's a great somewhat of a hedge against that too. So this is a market that has a lot of opportunities if you're looking at a variety of places. I do think, though, that most investors, nearly all, including what I do for myself, you're best served being diversified here. It's very hard to predict the repercussions of the AI revolution. Overall, the market will win, so I like a very broadly diversified approach.
If inflation is more persistent than we thought, should the Fed be hiking?
There's a lot going on with the Fed and the way that they're making decisions, and I think they're leaning slightly towards hiking because of your very point there. It is just they just cannot get it under control. Yes, it's decelerating, but it's like somebody who's 200 pounds overweight, still gaining weight, just not much as weight as they were before.
Hmm.
We still have a problem, and I think that that's why we're probably going to see the market move
And
upward.
that's not a big headwind for stocks?
I don't think it's a big enough move to be a big headwind for stocks. It maybe might slow put a little bit of the fuel off of the fire, but that's
Yeah.
about it.
Peter Mallouk, always so great to have you. Your time, your
Likewise.
expertise. Thank you so much.